Good afternoon. This is Deines with your midday grain comments for Wednesday, March 2nd. Today on the Chicago Board of Trade, we saw corn close up 1, soybeans up 3, and wheat up 4. We finally saw a small bounce in the grains today after trading lower for 6 days in a row here, and the recent decline has really pushed us near the contract lows on corn and on soybeans to the lowest level that we've seen since November on the nearby futures. These lower prices did spark a little bit of fun buying today, which helped the market see a slight rebound, but overall we're very limited on the fresh news into the market here, especially from the fundamental side of things. Corn was mostly flat to slightly higher on the day today. We've been in a pretty range-bound market here. We did see the weekly ethanol report show production down 7,000 barrels a day, and stocks were down 500,000 barrels as well. But overall, we're still seeing some pressure from South America as planting on the safrinha crop continues, and the weather remains no concern to finish their harvest season and continue to plant corn there. So again, a very range-bound market with a little fresh news to the trade and still feeling the pressure from the Ag Outlook Forum that suggested 2 million more corn acres in 2016, certainly weighing on us. And we'll look for that contract low of 354 and a quarter on the May futures to remain support for us here in the nearby. As we look at the beans, reports this morning estimated that China is expected to import 83 million metric tons of beans, which is up from the 78.4 that they imported last year and higher than the USDA's expectation of 80.5. So that certainly helped us get a little bit of a bounce with maybe some more demand interest than what we had originally expected. South America, however, though, is continuing to harvest well, good yield results, and that's really continuing to limit our upside potential on soybeans. Weather is going to allow their harvest to continue and progress very strong, and the ports are expected to stay very backlogged as we move forward here. And as we look at the export world, Brazil is reported to have exported 5.4 million metric tons in February, which is a record for February and the third highest month ever. So even though we are seeing an increase in imports in China, we're also seeing an increase in export from other countries outside of the U.S. And most of that continues to come back to the overall picture here that we talk about being in a supply-led market today rather than a demand-led market. And with the situation in currencies, it's very tough for the U.S. to be competitive in that global landscape. So something to certainly keep an eye on moving forward. But again, very little fresh news on the fundamental side of things for soybeans. As we look for some support, that will come in at 852, which is our recent 3-month low on the nearby contract month. And as we look at wheat today, we did finally find some buying today. Drier weather concerns and some profit taking helped with that. The dollar, again, though, remains strong, and export business remains very quiet with the U.S. at a very significant cost disadvantage. We did see Egypt make some purchases from Ukraine and other markets today, but again, on the fundamental side, remaining very irrelevant for the U.S. to compete in that global landscape. So again, not a lot of fresh news here. Expect this to be a very choppy, range-bound market. Certainly encourage you to start thinking about the 2016 marketing year, looking at some different tools as ways to extract some premiums. It looks like we might have a little bit of a weak March here, really putting a lot of eyes towards that prospective plannings report here at the end of the month. So that's all we've got for you today. Hope you all have a great afternoon, and we'll check back with you tomorrow.